This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver. I'm joined by John Kaiser, the founder of Kaiser Research Online. Welcome back, John. It's great to see you.
Vanessa, it's great to be here.
Now, John, when we last spoke in January, we talked about a sense that you had that we were kind of in a bottoming phase. Why do you think we haven't seen, why do you think we're still kind of in this trough?
The resource sector is paralyzed because there is no obviously strong economic growth globally. Even in the United States, economic growth has been weak because of the strong dollar, which has wiped out the lower oil price dividend. There is this general fear that interest rates, when they go back up, are going to tip the bond market into a severe correction that will wash over into the equity markets and make them go down 15-20%. And we are now in the fifth year of a resource sector bear market, and so nobody wants to be a hero and start chasing on the ask side until we have seen how this all will play out. I think it'll be not as bad as people expect. The consensus is that it's going to be horrible when interest rates go up. It's going to make the American economy tank. It's going to make everything fall like a house of cards. But precisely because everybody is so tuned into this, it will not happen. In fact, we need higher interest rates. The reason the U.S. economy is so sluggish is that despite all this money printing, it isn't a true credit expansion where credit is being extended to consumer. And because there is no credit expansion, there is no real consumption growth or wage growth. And because this isn't there, businesses are sitting on their trillions of dollars and just using it to buy back their stocks rather than invest in productive capital. I think when we go through this window of higher interest rates and emerge intact, we're going to see the global economy boom, and that will be the breakout for the resource sector.
Interesting. So you definitely think that interest rates will be rising sometime in 2015 or 2016? They
have to rise. The conventional reasons that say, we need to see inflation pressures and all that, the inflation pressures are not going to happen because there is no consumer credit expansion. And without that, no growth. So they need higher interest rates. The banks don't want to lend at super low rates because they also, there's just too much risk for them. Higher interest rates, higher real interest rates are critical to a growing economy.
So you think higher interest rates will be good for gold and therefore good for the resource sector?
Well, the problem with gold, I'm talking about materials that the world needs. Nobody needs gold for anything except as a hedge against uncertainty. Higher real rates is bad for gold. But I argue that global economic growth, the prosperity that it brings, results in natural demand growth for gold as some of the wealth created gets parked in gold. And I think gold is stuck because also we are looking at this possibility that there's going to be another 2008 style meltdown. And that's not going to make gold go up. And the monetary response won't work in that case. So we are going into a depression if that happens, which is why gold's sort of stuck here at its sort of new all-in sustaining cost for new mines, basically putting new mines into production, not so smart an idea.
Now, what do you think of all the companies that have been borrowing and taking on debt in order to do these stock buybacks?
I think it's disgusting. I think it's just propping up a valuation there. It's a form of paralysis. It's a end times mentality. There is no belief in the future. There's just this sort of clinging on.
Live for the now.
And again, this idea we have to go through a normalization of interest rates to get people out of this paralysis and thinking about a positive future that's expanding rather than one that's converging on us. And even China, that's starting to change. They were the ones that had the expanding light at the end of the tunnel in the last decade while we had the shrinking one. But now they are starting to worry about that light starting to shrink. We need to go through an inflection. Perhaps the biggest hope for this is India. starting to come on stream with its much better demographic for the long term and becoming the foundation of the next super cycle. It'll take 5 years for this to sort of happen, but the next 5 years are not going to be great in terms of metal price trends, but you will be able to make money on individual stocks with specific projects and where there's some special reason for this company to be absorbed by a bigger company.
Now, how close do you think China may or may not be to declaring how much gold it has?
Well, they will be admitted as part of the special drawing rights for the IMF. That's expected to happen later this year.
Then they need to declare how much gold they actually own? Apparently
they do, and they become, the RMB becomes a proper reserve currency. So this is a big milestone for China because it doesn't want to use the US dollar for all its trade imbalances and stuff like that with other countries. It wants other countries to also be able to hold the RMB and not have to wash it through the US dollar. So, and I think we'll see a minimum doubling, possibly tripling of their gold holdings. One of the interesting things about Chinese gold production is that government buys it all. And a theme that I've been talking about a fair bit is look at China's environmental policy. China has had a policy of being the world's toilet for decades, but the people have become very unhappy about the contaminated food chain, about the air pollution and so on. And the Beijing Communist Party's biggest fear is an insurrection from people angry for very good reasons. So they are starting an environmental policy crackdown and saying we are no longer going to be the world's toilet. It is an environmental awakening, perhaps on a greater scale than what happened in the United States in the 60s and 70s. And that's going to change the supply of a lot of metals in which China dominates. And even their gold production is going to go down because it comes from many nasty little mom and pop operations where they just dump the cyanide or whatever
in the river,
and so on.
The village.
And when China's domestic supply of gold declines, they will start buying more gold at the central bank level on the global international market. So that's a potential demand driver that has nothing whatsoever to do with hyperinflation or money printing or any of this stuff. And that could be the surprise on the upside coming as a result of environmental policy. And a lot of metals are going to be affected. Zinc's going to be affected, tungsten's going to be affected, the rare earths are going to be affected.
China's going to be cracking down on a lot of these miners, as you say, which is going to be limiting supply. What do you think of their growth prospects?
Well, their growth is now at a much lower level. They've gone through the huge infrastructure ramp up. They need to shift the economy from an export infrastructure build-up economy to more of a domestic consumption, internal domestic consumption growth.
Do you think they'll be able to do that, to transition to a kind of self-sustaining internal consumption model?
They have no choice. They have to do this.
They have to provide jobs and...
Yes.
Now, what do you think about the current status of crowdfunding in Canada and basically just allowing more investors to access deal flow outside of the accredited investor regulations?
Well, the crowdfunding in private companies, I think this is going to be a wonderful way to empty the wallets of the general public by all kinds of little, strange projects and so on. My bigger concern is the publicly listed companies, the ones that are regulated with full disclosure and all that. They have a very diminished ability to raise money because the brokerage industry is changing. The type of brokers that funded the resource stocks are disappearing. And the pool of people, the accredited investors, is shrinking. The ability to get money into the corporate treasuries has been compromised. So I think changes that allow a broader pool of people, retail investors, to put money directly into properly regulated and disclosure enforced companies is going to be a good thing. It has to happen, or we can kiss Canada's junior public market goodbye.
Right. Now, John, what are you seeing for the rest of 2015? Do you have any optimism?
As I was saying earlier, the interest rate rise, as long as it doesn't happen, everything's going to stay in this paralyzed mode.
Okay.
When it does happen, it'll be scary because we do not know how it will play out, and I'm sort of suggesting a contrarian type of thing. So until that has happened, I really can't predict what the future will hold. That's why I'm basing bets only on individual companies, with geopolitical bets, with security of supply type of concepts like environmental policy, zinc, where I see depletion cycles and so on. It's actually a good market to look at the fundamentals of companies and place bets on fundamental outcomes, because there are almost no trends that you can just project onwards and hop in and expect to make any money. This is like true gambling that we're now into, but it's intelligent gambling.
Interesting. Well, John, thank you so much for joining us again today.
Thank you, Vanessa.